But looking at the climate picture and how we see things evolving, one of the questions I was asking Lars Jakob there was about how some of these clean solutions can actually be evolved into the larger shipping industry. So, and that was for a reason, because I've asked Thina to come up and talk to us about the banking industry's picture of sustainable investment, because she's part of the analysis team, sustainable analysis for the banking industry. And obviously they've got a risk picture. And when they look at shipping, you now see risk, or greater risk, of an environmental picture, I should say. So Thina Saltvedt from Nordea Bank, thank you.
Thank you. Good afternoon, everyone. For me, when I look at the development which we see in the financial sector, where we actually see in the society, so in the whole, as a whole, we see that sustainability, the climate changes are affecting us in a growing degree, and that is also something that is changing the capital market. I would say a lot has happened the last 1.5 years, because if you look at sustainability and investments, that has something been priced into investments and investors' choices for more than 10 years. What we're seeing now is that the questions of sustainability and climate changes, they're also coming into the models we're using to look at the financial side, the financing side of the business. So basically everything we do now has to be based on sustainability. And why is it so? Because we're seeing that the cost of not taking care of the society, not implementing the changes we see in the environment and climate, has been priced in. And the cost of climate changes are starting to increase. It's starting to have an effect on the profitability of companies, and that is why we also have to include that. Look at it. Externalities of the consumption patterns we have today has not been priced in at all, and that is why it's been so cheap to emit, so cheap to actually pollute, and that is about to change. Why? Because we're actually seeing the climate changing are affecting our everyday lives. So that is something we are now starting to take into our analysis. So capital, how important is really capital? I see capital is one very important tool actually to be able to move from today's society until a society where we actually are meeting the 17 goals you're seeing around you now, and also the Paris Agreement. It is important for us, and just to show you what has happened the last 1.5 years, because large investors are now starting to require that we base investments and the financial side on sustainability requirements. One good example, you might not recognize this amount, but this is the Norwegian Oil Fund. And the fund has had very strict criteria on how it's actually going to be investing, what kind of policies they have. Even though it has always had very strict investment criteria, it chose last year to actually publish 3 reports on how they're taking care of sustainability into their investments. And we're now talking about the largest sovereign wealth fund in the world. So just to show you what they did last year, they published 1 report on sustainability as a whole, 1 on climate changes, and 1 on the oceans. So what you are doing has a big impact actually on how investments will go in the ocean sector. And we also see some other trends which in the governance of this fund, which I think is important to pinpoint. And one is that this fund was actually the Ministry of Finance said that this fund should stop investing in oil E&P companies, pure E&P companies. And do you know what happened when that decision was announced? We saw actually that the energy index on the European stocks fell by 1.7% straight away. So what these big funds are doing is actually will impact the total financial market. And it's not only the oil fund, but it's also big investors, the largest investors in the world, BlackRock. The CEO of BlackRock actually said at the start of 2018, and that was a real eye-opener for the rest of us. They said that for us, it's not enough any longer to only have a financial return on our investments. We will also need a social return on our investments. We will require that. And what do you mean by social return? They mean that investments need to be based on sustainability. So these are big changes we're seeing within the financial market. Our owners in the financial sectors are pointing to us. They want to know where we are investing their money. They want to know who we are lending to, and they wanted their investments and money to be spent in a social and environmental friendly way. So these are some of the changes. You also see that central banks are starting to worry about the climate changes. So the central cooperation between some of the central banks in the world, from the whole world, they actually published a report earlier, or a month ago, saying that they will start to put more pressure on the financial industry as such to start reporting and start following up on the sustainability goals, basically because otherwise they are afraid that if the capital is misallocated in areas where you see high pollution, where you see climate changes are affecting the profit stream or income stream of a company, then in a worst case scenario that could actually have a very negative impact on the total financial sector. What we are afraid of is, of course, ending up where we did in 2008 with a new financial crisis. So that is why also the central banks are saying that the cost of polluting and the cost of climate changes are starting to have a big effect. This one was also something I found in the newspaper, because we often talk about climate changes, but plastic is now starting to get such a big problem and getting so much attention that not only are some of the investors starting to ask about a climate footprint when they invest and when you produce products, but they're also starting to ask about the plastic footprint. So that says something about how big this problem has grown and how we actually have to deal with it. Because if we don't deal with it, I think it will be very difficult to get investors to actually look into your company in the future. And that doesn't only mean the production you have, but it's also the services you are offering. Of course, these kind of changes, it's not only climate and environment, which is important when we talk about sustainability. It is the whole society. So workers' rights, for example, how do you actually the water use, the harbors, how are we actually treating the whole system, the whole cycle, when we look at the shipping industry as a total. So these are some of the changes we're seeing, and they're starting to have more and more impact on the investment society, but also on banks and the financial society. So where are we? Well, I think this has been one of the problems we have been stuck with in the shipping sector. It's been a bit like, yes, we know there is a problem, but we hope that somebody else could solve it for us. And that could not continue. So I think we are seeing that, when we have to, we start reacting, we start developing. And I think also first of all, the CO2 emissions, actually the shipping sector itself came out with or announced last year, was actually a very good signal to the markets that we're taking this problem seriously. I know the IMO are coming in much before, and the horizon on the CO2 emissions are very long. It's a long horizon. But still, sending these signals and actually following up on them are very important, because you need to prove in the future that you actually are taking care of the society and the climate changes. So what do we want? I mean, your business, the shipping business, are very important actually to be able to reach these goals, not at least the climate goals. And why is this so? We want to get more of the shipments from land to sea. And the reason why is that in the future, we we expect that shipping or transportation on sea would be less or harming the climate less than we see on land. So it's a wish that more of actually the transportation should go on sea. If, of course, the question is if, we can get the shipping sector polluting less than it's doing today. So I think now it sounds like I'm very negative, but I see a big opportunity here as well. And I think Nordea was one of the is a very good example of actually there are good opportunities within the sector to solve this. And I found this because the bulk or the container ships are what I'm showing you here is actually it's 100% of all the shipping. So it's not the total. It's not the total for all transportation sector, but for the shipping sector. So especially the container ship segment has been the one who's has contributed to a large share of the climate emissions. And if we can manage to clean that up, it will be a very important driver to actually get more of the transportation from land to sea. So interesting, I would say, business opportunities here. What are we afraid of if it's going too slowly? What I'm showing you here is actually on the energy side. If we're moving too slowly from where we are today until a more greener shipping sector, but also what kind of energy you're using to fuel your ships. I'm afraid that we could have large capital swings. What we don't like is actually that the politicians are coming in and saying 5 to 10 years from now that we are not on track to reach the Paris Agreement, so we need to move faster. The trouble, what we don't like in the financial sector is unexpected and large changes in capital moves. So what I'm afraid of that if we don't speed up the green transmission now, we will have the politicians in a 5 to 10 years time, and they will say, now we have to change. And why do you have to change faster? Because we're seeing that the climate changes are putting even more pressure on businesses and the costs. So I think it's important that we move today, so we can have a more transparent and more aligned strategy to actually reach these goals. So we avoid that we're seeing these big changes coming that could move the capital in a fast way, because if it moves too fast, what will happen then? Well, what I'm afraid of, if the capital moves too fast because any of these changes come, the politicians or changes in consumer habits, we can end up with stranded assets. And stranded assets do not only have to happen in the energy sector, such as oil and gas. We have seen that in in the coal sector already. It could also happen in the shipping sector. So be careful with this and start now to think about the opportunities. So what and how do we actually measure sustainability and climate changes, and why do we do it? Well, now we started actually to give all the companies we are trading with a sustainability ranking. And that ranking is part of the credit process of a company. Why do we do this? Because we think it's important to start actually put a price on the risk of climate changes. This is the way we usually deal with risk in the financial market. The risk will have an impact of the accessibility to capital and the price of capital. So before, we have not included climate changes into that equation. We have market changes or market risk. We have the risk of the partner, but not on climate changes. So that is something we're starting with now, to include climate changes within this calculations. Why do we do that? Well, if we don't calculate the risk in a appropriate or manner, we could risk that the capital is allocated to places which will not give the highest return in the future. And highest return, well, we don't expect that the highest return will come in something that is polluting or something that does not take care of climate. So that is what we're working with. And who's the first in line in the financial sector? Well, that is the insurance companies. Why? was because the climate changes had already started to influence their businesses. The costs of climate changes have actually caused higher payouts for the insurance sector. But they don't want to pay this in the future. You know, the insurance sector doesn't want to pay for the climate changes. So they will, what will they do? Well, of course, they will put that price, the cost back to us. So they will increase the insurance premium. And that is not the future. That is happening already because the climate changes are starting to affect the businesses. So these are some of the examples we have. To the left here, you can read about more the total developments we're seeing within the insurance sector when it comes to climate changes, and how actually they are developing their policies towards the ocean sector. So these are, what I'm showing you here is the climate-related payouts or cost for the insurance sector connected to climate changes. And this is why, of course, the risk that the payments will grow in the future are increasing, and that is also why they're starting to include this in their risks calculations. But of course, this is not only the insurance sector. We do exactly the same. We started to do exactly the same within the financial sector. So what is happening? Well, when we're starting to actually give this sustainability ranking of a company, this ranking will be taken into the credit process. And the credit process is where actually the bank will decide who's going to get a loan and what price they're going to get on that loan. So now sustainability is part of that rating of a company as well. So if you do have a high or a bad climate footprint, that will have a negative impact on your credit rating. And what will happen if you have a bad credit rating? Well, the credit terms will be worse. It will get more expensive to get a loan, and you might end up not getting a loan at all. Is this a future then? This is not a future. This is something we have started with already. So this is something you should consider as well when you look at strategies and business in the future. Of course, it's not only in the negative, because some companies have already started this, and that is the positive side as well. If you do change the strategy in a more environmental friendly and more climate proof direction, that should move in the opposite way as well. So if you have a good footprint, if you have a positive footprint, that will have an influence on the access to investment and capital in the future or also now. So what we're trying to do in the financial market is actually to put a price on the risk connected to climate changes and sustainability. And in that way, we want to move the capital, allocate the capital in a more sustainable direction, and we also think that that will be in the long term the best. We will see the best outcome. So these are just to show you some of the product markets which have been growing for the last couple of years. Some of them are green bonds, but you also see that a lot of bonds connected to sustainability is starting to arrive. So that is our way, or job in this part, is actually to offer the financial products that could help out on these solutions. Thank you.
Let's just start by looking at the range of financial instruments that you were talking about there: bonds, loans, investments in stock, insurance. They're all coming together, you say, to have a more coherent impact on the climate change picture of companies and institutions. Do you find that is actually, you said it is having an impact. Have you actually turned around to companies and said, no, I'm not giving you a loan?
Yes, we have. We have.
And have they gone away, looked at what they're doing and turned around and said, okay, now can you give us a loan? You know, did you work with them to find a low risk scenario so they can get the loan eventually?
Yes, and that's very good that you actually asked that question, because we don't want to throw our clients away.
Yeah.
We want to work with you, and that is important, because we will say, if you were going to apply for a loan from me, and I said like, I'm not really sure, because the project you're actually introducing now, it doesn't look too good if you have a very high climate footprint. And then we could work together, because if you say, okay, what could I do to make this more sustainable? Then we will have a look at it together. So I wouldn't say like, no, if you don't have a project which is good enough, out you go. We will work together with you to try to find a solution that we could actually move in a more sustainable direction. Because what we want is a change. So if you don't have the best solution today, we will help you or work with you so we can get a better solution.
I'm curious how companies, when we look at the sustainable goals, development goals that we've got all around us, and we look at the various sort of social targets that are being established within companies, how they actually go around achieving that, whether there is the framework to actually give the support for companies to actually remain a competitive company in their work environment, in their industry, and get the support to actually evolve into a modern company for tomorrow.
I think, it will be very difficult for you actually to get somebody to invest in your company if you can't show that you actually have read this and decided upon how your company and your strategy will be aligned with these goals in the future. Because investors will say like, okay, why haven't you mentioned sustainability at all? First of all, that would be a very good sign that, okay, your business, what are you actually doing? And then if I can't find any information about what you're doing on your homepage, or when I talk to you, you don't want to talk about these themes, I will find that a bit, scary. And then I would say, like, the risk of your business would be too high for me to actually support. So I think you will have a big problem if you don't show that you know what sustainable a sustainable company is.
This might sound like a bit of an odd question, but is there a significant part of this because there is a generational shift in the family-owned businesses?
That is very interesting, because we see, and I guess that you've seen that as well in the newspaper, but we see a very big difference from the young millennials to what we're seeing in the older generations. And I think, we have not even taken in how this shift in, generation will actually have an impact on consumer patterns. I think it will happen a lot when the next generation come in, and that's only 2, 3, 4 years. Yeah. So we have seen this little Swedish school girl who's actually managed to get kids all over the world to march for climate. And it's not more than 2, 3 years, and they will be out voting. They will be out applying for a job. How will your company actually attract these youngsters to come and work for you if you don't take care of the sustainability goals? I can tell you they're already asking these questions. Why should I work for you? And do you have this in order? If you don't, they will say, I find another company because I don't support your goals or your strategy. And I think also, not maybe 3, 4 years, they might even be your boss. So what do you say then?
You say yes.
So I think it's interesting to see this, this generation shift. And we also see it in the way they are investing, because there's something called impact investment, which is basically when you invest, you require not only financial return, but you also require a social return on that project. And these kind of investments has been growing very sharply for the last 1 to 2 years. And when we're seeing the growth in impact investment is coming, among others, from millennials and women. So we're seeing that, the millennials will have a completely different view on this.
There's a new force, there's a new influence.
It is.
In the industry that's coming into play.
Yeah.
I see. As I was just preparing for Nordshipping, I started to look at a number of the listed companies in the Nordics who are providing clean tech solutions. And I found about 5 companies. All 5 of them have had their stock market value increase by roughly 100% over the last 12 months. And I thought that's a very significant indication of what's happening particularly in the Nordics, I'm not sure about the rest of the world, how investors are seeing these companies and seeing a future in these technologies. There's clean water, there's new fuel types, there's fuel cells companies and biotech companies for hull fouling. And these are companies that have all seen their price of their stock, rocket over the last year, because the markets, I believe, starting to see the value in these products. in the industry. So do you see the appetite for companies changing, the way that investors look at companies and say, okay, I'm not just going to invest in that company now, I'm going to invest in this type of company. It's much more in line, like you say, it's much more in line with our values. Is that really starting to have a strong impact?
It's starting to have, it's a growing impact, I will say, because as you're saying, this focus is very strong here in the Nordic countries, but in Europe as such, because the European Union is actually introducing a taxonomy this year for investments, next year for lending, I guess. And a taxonomy is basically how do we refer to sustainability and climate. So when you're talking about green, and I talk about green, is the same thing. That is very important because otherwise you will have all these questions about greenwashing. But we're seeing a growing interest for this. Look at the election in Europe as well, the EU. Yeah. You saw that the green parties were growing because I think that people start feeling that climate changes are affecting your life. And then you see action as well. So they're putting much more pressure on us as companies to actually improve, because so far we have had an overconsumption in total, and that overconsumption has had an impact on climate and the environment, and it's been too cheap basically to pollute.
Yeah. Just on a final point then before we close, I just wanted to raise the question about the types of ships that as a bank you would invest in, because a large part of that picture still had tankers on it. And if we go into a decarbonised world, the number of tankers is going to decrease. There won't be the tankers. There might be the hydrogen carriers, but there won't be the tankers. Have you looked at, when you talk about stranded assets, do you look at not only about how clean the vessel is, the ship is, or the unit is, but actually, is it going to be needed in the future?
It's a good question because we cannot only look at the energy they are using. Of course, you have to look at the business as well. I used to be an oil analyst for 10 years, and I changed last January. And it was a reason as well, because I see the green markets are growing, more interesting markets. But of course, this is something you will. One thing is that in your credit score, you will in the sustainability score actually. Your market risk is not taken into, but that is into the credit evaluation as such, because market risk is something we deal with today as well, and I will call that market risk. We've seen that on coal. We're seeing it's growing negativity against oil, especially from certain areas. So the thing with stranded assets also for the shipping sector is, of course, how many new oil tankers do you need? And I think that my opinion in my analysis, I think we're going to reach a peak demand before 2030. And of course, if we reach peak demand in consumption, then we don't need that many oil tankers in the future.
Yep.
So, yeah.
Good. Thina, thank you.
Thank you.
Thank you very much, Thina.